Nearly midnight in the UK on the 27th of September. So not a good day for us yesterday, or not a good day for me anyway. I expected the dollar to weaken. The dollar didn't really strengthen on the rate hike announcement on Wednesday, which I saw as confirmation of my theory that the dollar would continue to head lower after the breakdown. We'll have a look at the dollar index chart in a minute. The big confusion for me was the dollar yen. This really did look like the dollar was going to weaken and the yen was going to strengthen. We'd hit 61.8 Fibonacci resistance at 113.23. We also had the 200-week moving average at exactly that point. So that looked like good resistance to me. I needed to see confirmation on the daily chart. We had broken above this little trend line here, but this was far less significant. I needed to see some confirmation on the daily chart, which I believed that I had. There's that 61.8% fib level again. We had all these, well actually these are easier to see on the weekly chart. We had all these peaks as well for the year. So there was price action resistance here up at 113.38, 113.30, 113.37 from these weekly highs as well. So I saw that as further resistance. There was three good reasons on the weekly chart why that should reverse. And then as we zoom in on the daily chart, you could see a potential double top here right at that 61.8% resistance. And the big negative candle here, the big engulfing candle showing that bears were taking control of the market. Really, yeah. So the double top and the engulfing candle, as well as everything I've shown you on the weekly chart, and the fact that we're severely overbought in the market, all these factors pointed to me that we were going to go lower in the dollar yen. And that was completely wrong. We bottomed out at 112.53, and as you can see, we just shot higher, broke through absolutely everything yesterday, completely caught me by surprise, and we're now trading above this little trend line, which goes back to the end of May. So I assume now that we've broken all of this resistance, the outlook is very positive for the dollar yen, and therefore we should be long. My dollar index head and shoulders theory was blown away. As you know, a break of the neckline and the 100-day moving average to me looked really negative. This big candle here showing me that bears were well in control and that we were going to head lower from this region once it was broken. That wasn't to be the case. We traded sideways right up until the FOMC meeting, even on Wednesday trading sideways, and then for some reason yesterday we just rocketed straight back up through these levels. So very confusing, very difficult to trade this. I mean, really, obviously, if I just zoom in on what we've had over the last few weeks, you can see there's a lot of sideways action. No trend to talk of for us to follow. We're just not moving significantly in either direction. You can literally see a couple of red candles and a blue candle, a couple of blue candles and a red candle. You know, we're not managing to move in any direction. We're having whole weeks where we just move sideways. So we can see there is some resistance here from these lows down here around the 94.90 area. You'll remember that area from the way down, 94.90 to 95.00. That was a significant area on the way down. We're going to have to get up through 95.10 to signal further gains, but right now it does look like the bulls are getting back into control of this market. So the euro dollar completely fooled me as well. I saw this as an inverse head and shoulders pattern. It looked pretty clear to me. We have also this triangle. So once we broke above it, it looked pretty positive. And the fact that we were holding this neckline so well over the last 4 sessions, if you were buying it down there and scalping, you did well because there was a good 50 to 100 pips profit. Maybe not 100, 50 to 70 pips profit each day as we bounced up to that 118 area. I thought eventually having held this, proving that the neckline was working, the market would then take off and we'd head up to at least this 200-day moving average. That was not the case. Yesterday, we unexpectedly, or I did not expect this market to just collapse straight through everything and even down below the 100-day moving average. So bears are back in control of this market. The patterns failed. These head and shoulders patterns seem to be failing a lot lately, so I'm going to have to make a note of that. And they're very unreliable. Maybe just too many people are seeing them and the market's being forced against them when everyone's got this position on. So now we've broken lower. It doesn't look very good for the euro dollar. It looks like we will continue to head lower. Gold has actually been quite a good market for us if you've been trading gold. We've been selling it up around the 1206, 1208 area with stops above 1314. That's been working over the last few weeks. And then this trend line down here was giving us some support around 1190. 1187 is the low there, but more recently 1190, 1191. I did suggest buying along there as well, but only if you're prepared to reverse into a short. So if you were quick and nimble, if you did manage to stop when you were stopped out, if you did manage to move into a short position, that's looking good. We've broken out of this sideways pattern now, so I assume the dollar will strengthen against gold, and gold will head lower down to the mid 70s area, and then a break below 1171 will take us down to the previous lows around 1160. So it all looks quite negative. Clearly, if we get a retracement back up to 1190, 1192, that should be a selling opportunity, assuming that this pattern holds and the market trends lower. Looking at the Aussie dollar, actually, I'm just going to show you the hourly chart of the Aussie dollar. I saw this also as an inverse head and shoulders pattern. You can see we'd come down, we formed a left shoulder, a head, a right shoulder. There was the neckline. We broke above it. I'll go back to the daily chart now. You can see how we were coming back to the neckline, which I saw as a buying opportunity. But if I go back to the daily chart, anyway, we halted at this trend line, which is fairly minor, really. It only goes back to June, so it's only like 3.5 months old. We halted at it, which is fine because I expected that we would, as you know, around the 7300 area. And I thought we'd come back and test the neckline, which would be quite typical of the head and shoulders pattern. And then I thought we'd rocket higher. And now the measured target for this would have been a 250-point rally from around 72.25. So I was looking for 73, 75. And that tied in quite nicely with the 100-day moving average. So I assumed we would pause around the 73.30, 73.40 area because we had the Fibonacci resistance and the trend line, much more significant trend line going back a long way, and then eventually break to the 100-day moving average. Anyway, wrong again. The dollar's completely surprised me yesterday. We've broken now back below the neckline, which means that inverse head and shoulders pattern has failed, and I assume that the dollar will continue to strengthen against the Australian dollar as well. This is the weekly chart for the Canadian dollar, US dollar versus the Canadian dollar. As I've been writing for several days now, I just can't make sense of this mess. You can see on the weekly chart that the moving averages are converging. They're going sideways just to show that there is no trend to follow here. The daily chart is a horrible mess. The market's hard enough to figure out as it is, but when you've got this going on, I mean, we really haven't we haven't moved in any particular direction, as you can see, for a couple of months. We go down sharply, we go up sharply, we go down sharply. But we're staying within these ranges. The moving averages are giving us no clue whatsoever. We're not even really respecting the trend lines. As you can see, I put this trend channel on, but we've broken up above it now. We spiked up through the 100-day moving average, so you would think that that was the start of a move higher, but then that reversed. I really don't know what to do with it. I'll just shut up about it now because I haven't got a clue, and hopefully you can make more sense of it than I can, but I've no idea where we're going on this one. If you've been trading the mini S&P this week, the low 20 level worked initially as support, and then we had this buying opportunity down here at 27.0807 purely on the back of the Fibonacci level, and that's worked both days. So that looks okay, but the bull market's very much intact. Yeah, we're buying into dips on the US stock markets. I'll finish off with silver, clearly in a bear trend. This looks like a bear flag, so a little move up and then the break lower will send us back to 1390 and probably will break that and head lower again. So this doesn't look very good for silver. It looks like the bear trend will remain. It's been very difficult to trade for the last 2 weeks, as you can see. Up one day, down the next. Some dojis there where we've barely even moved. We've closed near the opening, so it's really been a case of scalping the market. I'm absolutely appalling at trading this kind of market, getting in, getting out. You've got to sit there in front of the screen and be very, very active. It's not my style of trading at all. But if you've been taking advantage of that, well done. Anyway, it does look like silver's going to go lower and follow gold now. That's it. Yeah, I found it very confusing. It's been a horrible couple of months, if I'm honest. An unusual period where we're just going sideways, chopping around. You've got to take profits very, very quickly. I tried to identify a trend. I thought we were getting one, and I was completely wrong. That has reversed. And as I say, it looks like the dollar will continue to strengthen, but I'm actually probably going to sit it out today. I need to see some clarification. It's just way too confusing. This chopping around really does mess me up. I'm going to have to wait for some clear signals.